For those investors looking to compound their investments, it all comes down to income. How can you convert your hard earned savings into a steady stream of valuable paychecks? There's plenty of ways to do that, but one of the best continues to be high grade dividend stocks. After all, dividend stocks generally offer higher yields than bonds and give you the ability to see your income rise through increasing dividend payouts as well as capital appreciation. Bonds, CDs, and other traditional fixed income products can't do that. The only problem is, not all dividend stocks are worthy. No one wants to see their payouts get cut or see their capital go down in flames. Therefore, one must focus on quality. So let's take a look. Selling screwdrivers, wrenches, and other hand tools is not all that exciting. However, these businesses have helped make Snap-on Incorporated one of the best dividend stocks around. Snap-on manufactures a variety of tools, equipment, and repair information systems for various industrial markets. Many professional mechanics and assembly workers swear by Snap-on's better-made products. And with a simple socket wrench set costing over $300, Snap-on isn't exactly going after the do-it-yourself and weekend warriors. You need high performance when you're trying to fix a train or repair a wind turbine. This focus on the industrial market has insulated Snap-on from the volatility of the consumer market. As a result, Snap-on has paid dividends without interruption or reductions since 1939. Its last dividend increase was over 15%. Part of that increase comes from the reduction in corporate taxes. The other continues to be Snap-on's move into higher margined tech products. Modern machinery is full of computers and sensors. Snap-on is quickly becoming the standard provider for computer-based diagnostic equipment. This has supercharged its earnings in recent years as earnings per share powered 12.6% year over year in 2018. Since 2009, Snap-on has grown after-tax profit by 17% compounded annually to $699 million in 2018. Over the same time frame, after-tax profit margin improved from 7% in 2009 to 17%, while its return on invested capital improved from 7% to 14%. The company has also generated free cash flow of $1.4 billion over the past 5 years. Snap-on has increased its annual dividend each of the past 10 years and has grown 17% compounded annually from $1.85 per share in 2014 to $3.41 per share in 2018. Over the past 5 years, the company has generated a cumulative $1.4 billion in free cash flow while paying $744 million in dividends. Its recent yield is about 2.43%. So now let's go to our charts. We're looking at the 20-year monthly chart on Snap-on Incorporated. The symbol is SNA. And for disclosure purposes, I do not own any shares of Snap-on at this time. Recent close is 163.45. Now, looking at the price chart, a technician would take a look at this and say, hey, we've got a megaphone type formation setting up here. Megaphone formations oftentimes break down, so a typical technician is going to be looking for this price to move below the previous price here, maybe down towards, say, the 125 to the 130 level. I have a different formation in mind. Let's take a look here. Here's your MACD. Looks like the top was back in, say, late 2015 at about that point there. The bottom in the MAC was here, and it looks like it's setting up for a nice basing pattern right in this area here above zero, so there's still some strength. Looking at the bottom here in 2009, and then the bottom in the year 2000 was there. Let's go back up to the price chart. Look at those bottoms again here in 2000, there in 2009, but the bottom now is easily in this area here. So I love that step up with this move in the MACD, which is showing a divergence compared to the price chart. That is very interesting. Other things that are interesting in the MACD histogram, a very steep improvement going through there. Moving down into the price rate of change, again, we see some very good consolidation over a very long period of time, over, say, 3 years. In 2009, this consolidation took, say, a year and a half or so. That longer consolidation, in my humble opinion, is going to set up for a longer move upward. Into the RSI, we're at a 51.38 above that 50 line, just barely. But again, nice basing pattern right in there versus 2009. And we don't have much of 2000 to see, so it's there. And then 2011 was in here. But this long-term basing pattern, in my opinion, is extremely favorable. Here into the stochastics, same sort of pattern. Then into volume, volume is increasing. That is very favorable as well. The Williams pretty much echoes the other oscillators with a nice basing pattern in here compared to, say, 2009. Back up to the price chart. In my humble opinion, when the market bottoms out, hopefully in not too long, Snap-on is a company you should consider. But as usual, conduct your fundamental analysis. And so for today, that's ChewDog Charts. Thank you.